Hi, my name's Chad Peters. I'm president and CEO of Ridgeline Minerals. Ridgeline is a Nevada-focused hybrid explorer for precious and base metals. We have 5 projects in Nevada that are being explored this year, or being drilled, by 3 by our major partners, 2 by Ridgeline itself, with over $11 million US going in the ground.
Hey Chad, good to see you again. Good time to be in the gold business, well, and copper in your case.
Yep.
How are you finding it out there?
That's great. I mean, things are definitely improving, that's for sure. No, things are improving in the in Nevada. We're seeing a lot more exploration companies raising money, a lot more drill programs going on right now, so we're definitely encouraged.
Right, okay, look, I think the thing I want to get at it today is just trying to look at this and interrogate this kind of hybrid model again, because you started off as a hybrid model, but you're doing as much of your own exploration now, so I'm not quite sure what to call you.
One of the best exploration companies out there. How about that? We'll go with that. all jokes aside. So I think it's the great thing about the hybrid exploration model for folks that are maybe new to the space or new to the company is it allows you to be very flexible, right? In our case, we both do our own 100% exploration on our own projects. We're still looking for that big, 100% owned discovery that drives the company's market through the roof. At the same time, we are also partnering with major companies to advance and explore other assets within our portfolio. And what that allows us to be is incredibly flexible based on market sentiment. So in a bear market like we've been in, call it 2021 through late 2024, it was tough to raise money, right? So we leaned into our deals with our partners, and we saw, anywhere from $5 to $10 million being spent every single year across multiple projects, all 100% funded by our partners, allowed us to keep our dilution down, still participate meaningfully in an exploration story, but kind of ride out a tough market. Now that we're seeing all-time highs in gold, definitely investor sentiment is definitely improving. You're seeing a lot more eyes on junior names, and we think it's the right time to get a little more aggressive with our own projects, which is why we raised about $4.5 million in the first quarter of 2025, and we're going to be deploying roughly, I'd say $2.5 million of that into the ground across this year and across 2 projects, one of which, Big Blue, is currently being drilled. We're in the middle of a drill program right now. So I think it's a great model, really allows you to be flexible, nimble, but at the same time, really keep exploration moving forward.
Okay, well, let's look at this kind of hybrid collaborative part of the business model, because these are guys, your partners are, name dropping is allowed. You should maybe talk about who they are, the kind of balance sheets that they've got, and quite frankly their attitude to exploration in a market like this for gold.
No, for sure. We have 2 deals with Nevada Gold Mines totaling $40 million US in spending in the initial parts of the deal. Nevada Gold Mines is a joint venture between Barrick and Newmont in for all of their Nevada assets. We're seeing very aggressive spending by Nevada Gold Mines across both projects. They're both going to be drilled this year. And I think the real thing that sets us apart, the way we've structured our deals, is we have fully carried interest all the way to commercial production. In the case of our gold projects, we hold a 25% fully carried interest to commercial production in the event that Nevada Gold Mines makes a discovery in this early stages of the deal and then advances a project towards development. So that's when you try to put a dollar figure on what a carried interest is worth, these projects, mines can be hundreds of millions, if not billions of dollars to put into production. Ridgeline would not suffer any meaningful dilution to see that project taken all the way from discovery to first gold pour with the way we've structured these deals. So we are playing the long game. We believe in the projects. This isn't just a quick flip, hoping to see some money go in the ground and maybe we get some cash payments. We really do believe that we're on to discoveries at these projects, and we want to see them advanced. We also have a $20 million US deal with South32 at our Salina project. That is a carbonate replacement deposit, or CRD as they're commonly known. And it's a very kind of analogous exploration story to the early days of the Arizona mining Taylor discovery, which eventually South32 acquired for $2 billion. So same geologic setting, same deposit style. A lot of similarities there that got South32 quite excited, and so they came in and did this deal with us, and we're going to be drilling a $3.5 million US program being run by Ridgeline this year, so we'll make 10% management fee on every dollar spent.
Right, so you've raised your own money. You've also got a management fee coming to you of around 10%. So what's the total spend there in across all of your projects this year, did you say?
Including Ridgeline's 2 small maiden drill programs we'll be doing on our own assets. We're looking at $11 million US. That's roughly 15 million Canadian, depending on the day. which if you do the math, that's about roughly 49% of our entire market cap is going in the ground this year. Very little of it, only about, 10-15% of that being funded by us.
Okay, so I do want to get into each project. I want to get into Selene. I want to get into Black Ridge proper. Okay, but it sounds like last year and then maybe the year before, didn't quite understand the model here. Is there going to be a step change here? I mean, where do you see the moment where the people should realize maybe the value which has been created here?
Yeah, I think we actually did struggle to get the value proposition across to the average retail investor, especially in a tough market, right? A lot of folks really want to just focus on, hey, I have a single asset, it's a discovery, it's starting here, and I think it could go here. And that's a very simple story that, single commodity that folks can really get their head behind. I think with how we had structured these early deals, I mean, we had a CRD project deal with Selena. We had 2 gold plays with Nevada Gold Mines. Personally, Ridgeline was exploring for a porphyry copper, and we're exploring for oxide gold ourselves. So there was just a lot of irons in the fire, a lot of different pieces that I think people maybe had a tough time just figuring out what is this actually worth. And so what gets me excited about 2025 is we're heading into all-time highs in gold. Commodities are all ripping. I think everyone's starting to look at juniors and go, okay, it's finally time that these things are going to start performing. And we're teed up. We have 5 projects being drilled, tons of money going in the ground. I think the last 5 years of us putting these deals together, doing the exploration, kind of that hard work that doesn't always necessarily get valued by retail shareholders, I think it's finally coming together. So I'm very excited about this year. I hope that we deliver a couple discoveries to our shareholders, and it could be very exciting. I mean, we're going to have a drill turning. We've had a drill turning since March. We're going to have a drill turning at 1 or more Ridgeline projects all the way through December of this year. Catalysts, drill catalysts every single month from May all the way through probably early 2026.
Do you think part of the problem before was, I think gold's gone on a tear in 2024.
Yep.
And it's carrying on where it left off in 2025. So it's a very different environment. These collaborations with majors, with their balance sheets, with their own big portfolios, with their own agenda and strategy and timing, I think it was hard for people to kind of get aboard that thought of, well, when does this thing materialize for a company like Ridgeline?
Yep.
How has that changed in reality now? We've kind of skirted around the issue of maybe everyone getting a little bit excited about the price of gold at the moment, including these majors.
Yeah, I mean, that's the thing. The majors are just making tons of money right now, right? Their margins are excellent. And I think a lot of them are looking at it and they're seeing the same writing on the wall where they realize they're going to be overpaying for assets. A year and a half, 2 years from now, you're going to see the same thing happen again and again and again, where they, you're seeing these massive buyouts by majors that typically don't pan out for them. So what I think is exciting for us is because we're partnered with these groups, they're seeing that, okay, we need to replace reserves. And we have, in our case with Ridgeline, we have a great project, multiple great projects. Let's put our money into these projects instead of going out and acquiring something. I mean, you look at Mark Bristow's interviews. He is adamant that he does not like to overpay for assets, which means, a group like Ridgeline, 2 projects in Barrick's backyard, right? NGM, Barrick runs NGM essentially. They're the operating managing group. We're in their backyard. We're 4 kilometers away from a 23 million ounce gold mine at our Swift project. We're 2.5 kilometers away from a 40 million ounce gold mine and a $3 billion mill at Black Ridge. So what better place to put your exploration dollars than into making exploration, just new discoveries right in your backyard, near existing infrastructure. These are the backbone kind of projects of what has built Barrick and Newmont into the companies they are. And they're realizing they need to replace reserves, and they don't want to pay for it. They don't want to buy it outright, right? They want to, lean into partnerships like ours. So I think it's an excellent time for Ridgeline. I think you're going to see a ton of exploration dollars, which is, I think, explained by this year, right? We're seeing, the biggest exploration budgets we've seen in company history across 2 of those 3 partner projects. And it's because these companies see that, hey, we need to do more exploration.
And let's go back to the kind of setup here, which you said at the beginning. You said, look, the type of deal, we're fully carried through to a point, and we've got, a certain number left there. Why is that important? Because if I look at this kind of gold market, you can cynically say, well, these kind of gold prices, everything works, quite frankly. But at some point, maybe the market corrects. Maybe at some point, the price does come off, and then maybe, and that's going to be in the back of everyone's minds. But you feel kind of protected from that because of the structure of the deals that you put together?
We do. So at Swift, for example, they've spent, by the end of this year, NGM will have spent about $15 million US over the life of the project. They need to spend a total of $20 million US in phase one of the deal, which ends on December 31st of 2026. So this year they're spending $5 million. Next year they have to spend another $5 million just to meet their minimum expenditures. If they don't hit those requirements, I get 100% of the project back with 15 million of free data, good drill holes. They've drilled up to 1.5 meters at 10 grams per ton, right? Like it's a phenomenal setup for us. They have to keep their foot on the gas, or they lose that entire investment that they've already put into the company or into the project itself. Same thing goes for Selena. And then if a discovery is made, like I said, these carried interests are it's hard to put a dollar figure on, but I think when you talk about maybe a re-rate for the company, if we're able to deliver a meaningful discovery through our partners or 100% owned, I really look at like Kennerland as a great example of a company that started with a very similar business model to us, made a big discovery. Zach and the team did a great job kind of restructuring that deal into a royalty play in their case. But they're over, I think, 130 million market cap right now, give or take, 120 million market cap. So, Ridgeline's currently trading right around $30 million. So we're right in that pre-discovery kind of sweet spot that you typically see. Yeah, I think if you look back at a lot of big companies that have juniors that have made discoveries over the last 5-10 years, typically they trade between $20-30 million right up until that big drill hole, right? And then they re-rate. And so we're kind of in that spot right now, and I'm really excited for how this year plays out.
That's on one of your projects.
One of the projects, yeah. Yeah, we got 5. Yeah.
Right.
So no, it's
okay.
There's a reason I got this big.
That's what I'm interested in. That's what I'm interested in. You kind of what you're outlining is saying, well, look, if we make a discovery, you've got a couple of discoveries already, right?
Yeah.
You've got 5 projects
made in a bear market, right? Yeah, these discoveries were made in a bear market, and they did not get the traction that I would have liked. I think that'll change.
But yeah, I think timing is everything. But let's kind of stick with it on the asset by asset basis, kind of run through. So you kind of described one of those just then, and if they can make the kind of discovery which they need to make to kind of carry on with this one, that's all good news. But let's go through maybe priority order. The others.
Yeah, so Swift was obviously the one we were talking about most of the time here. So Selena is a recent deal with South32, inked that deal in August of last year. They've already spent $1 million or $500,000 US on deep penetrating geophysics at the project, which has identified a kilometer scale conductive anomaly that is analogous, again, like we said, in both scale and intensity to what they already have seen with the same geophysical survey at the Taylor deposit. That's what spurred them to speed up exploration. Their minimum spend over the first 2 years is $2 million. They're going to be spending $4 million in the first 18 months. So they're very excited. We're going to be doing a deep drill program starting in June of this year. We'll get a management fee. We'll offset our own costs. Also, I mean, look, our team made this grassroots discovery. We were the original, staked and expanded the ground here, and so we get to be a part of that. I think it's really exciting, and if we make a big discovery, again, the only way to participate in that discovery is through Ridgeline. You're not going to see South32 stock take off because they drill, because we go and drill 20 meters of 1,000 grams silver or something, right? It's just not going to go. But Ridgeline would be the only way to participate in that discovery.
Okay, well, let's take a look at what do you expect the drilling to look like? We're talking about maybe deep
drilling, like 1,500 meter drill holes. It's going to take 6 to 7 weeks just to drill the holes themselves. Some of the deepest drilling probably in all of Nevada this year will be happening at our project, all again funded by our partners. And what we're targeting is polymetallic mineralization. So the core of the Selena discovery is silver, lead, and zinc. You also have gold credits, you have copper credits, and you have tungsten credits. So the more we drill to the west, we get closer to the porphyry source. We anticipate copper and tungsten grades to increase along with silver, lead, and zinc. The farther away you get, your gold and silver picks up. So where we're drilling this year, we're hoping to hit high grade silver, lead, and zinc, plus or minus gold, copper, tungsten. When you look at it on a just to keep it real simple, on an equivalent metal basis, we've already drilled up to 6 meters of 1,100 grams silver equivalent in our original discovery. That's kind of what we're targeting at over at the Chinchilla sulfide target, although the zones typically average between 30 and 50 meters thick. So we're trying to find something that's 30 to 50 meters thick, and we want to see higher than 500 grams per ton silver equivalent, hopefully over that entire interval, with hopefully some high grade includings that are well over 1,000 grams silver equivalent.
Okay, so given the depth there, in terms of like the de-risking and understanding of the structure, etc., and any kind of lithologic variability, etc., what do you know? What do they know that's going to minimize the kind of or increase the chance of success?
That's a big reason why they're so excited. We've put 10,000 meters of drilling in what NGM actually refers to as framework drilling, is kind of what we did at Salina. So wide spaced drill holes across multiple targets to really understand the geology, mineralization controls, the grade controls, everything that makes that deposit tick. We've already spent 4 years doing and de-risking. So even at this target itself, we'd already drilled a drill hole into the top of the target, which we now know is the top because the geophysical survey identified, okay, this system starts at about 700 to 800 meters vertical depth. Our drill hole drilled to 650 meters, hit up a 50-meter zone of low-grade CRD mineralization with up to 3 meters of 600 grams silver equivalent. So it said, hey, the system is still alive. Once we did the geophysical survey, we realized, we just didn't drill deep enough. And what we're going to be doing with South32 is coming in, finishing those holes to completion, testing key structural zones that we know host mineralization already, and just taking those holes deeper and using the geophysics to really guide us on the kind of fine details of the drill hole. So we've really de-risked this project to a point where a major like South32 has a lot of confidence throwing big money at it in the first year of the program, which is really exciting.
Right. Okay. And then just maybe explain what the CRD systems are typically like, and if any comparisons to, say, like a Taylor type CRD system on this, and what else you know.
For sure. So CRD systems, like I said, silver, lead, zinc, they can be plus or minus gold. They usually have copper in them as well, but they're porphyry related. So there's every CRD globally is directly associated with a porphyry source. Typically, that CRD is between 1 and 4 kilometers away from that porphyry itself. So you can have an economic copper porphyry, let's say in Arizona, and then 1 to 4 kilometers away, you can have a completely separate mine owned by a different company, being mined by a different group that's focused on the silver, lead, zinc component that's mining the CRD. And so at Taylor, it is a kilometer and a half. The edge of the Taylor deposit is now a kilometer and a half away from the Sunnyside porphyry, which Barksdale Resources has been exploring for years. That is the porphyry source to the CRD that formed the Taylor deposit. Our Salina deposit, our Chinchilla sulfide zone, is a kilometer and a half away from the edge of this well-known porphyry that is currently owned by Freeport-McMoRan, and they're exploring that project to make a copper discovery. We're just off the flanks of it, and we're hoping to make a big CRD discovery. So both in proximity to porphyry source, host rocks, style of mineralization, our project is essentially a very close comparison to what the Taylor discovery became for South32 when they acquired it. What's really exciting for us, we also have a considerably higher gold component to our mineralization. So we see up to 0.5 gram to 3 grams per ton gold in mineralized intercepts, which I think in a rising gold market is an exceptional credit to include in a silver, lead, zinc deposit. So lots of potential. It's BLM ground, very easy to permit, which again is something that has been a struggle for the Taylor deposit in Arizona. It's somewhat of a wilderness area in that area that has made it difficult to get that permitted. We don't have any of those issues at Salina, so permitting looks great. We have access to water. We have water rights on the project. We have an advanced exploration permit that we got in July of last year, which would allow for essentially enough exploration to take this all the way to feasibility study and development. This project's teed up and ready to go. It just needed the funding, and that's where bringing in South32, which is a partner that understands exactly this type of deposit and has had success with these types of deposits. That's who we wanted as a partner, and now they're excited as well.
Okay, and with regards to the Chinchilla, you referenced Chinchilla a minute ago. Are there any possibility of any like near surface oxide resource there, or is it continue at that?
There is no. So our original discovery, the reason we put 10,000 meters into the project is we're pretty confident in saying that we have north of 70 million ounces of silver in oxide. Over 100 grams per ton is the average grade that we've seen so far in silver equivalent. So from for a range there, you could say, look, we think we can target something that's 70 to 100 million ounces of silver, open pittable, exceptional grades, that then transitions into an underground target at the Chinchilla sulfide, which is again drilling back towards the porphyry target. So we haven't done a resource on it yet. We feel that driving that exploration forward and making that big company changing discovery is what's required to really get this project going. I mean, think about like Taylor, like the original Hermosa discovery there. Wildcat Silver was pushing that uphill for 10 years prior to Don Taylor coming in. They restructured Wildcat Silver, and they drilled beneath the and back towards the porphyry at depth, and they hit the Taylor deposit, and that's what cracked that wide open. Up until then, no one cared about an open pit silver manganese lead deposit. So we're kind of taking the same approach as, yes, we think there's something economic at Chinchilla Oxide. We think you could have an economic resource there, potentially of scale. But until you make that big, deep discovery, it's not big enough to bring in a group like a South32 to actually, develop the asset. So that's why we're taking the route we did.
And how's again, coming back to this kind of relationship, this agreement that you have, at what point does South32 take over, when they've kind of hit their 80%, or would they likely maybe employ you to continue with the exploration for them? I mean, how does it work?
I think that the way it's structured is the way that almost every major worldwide would want to see a project move forward. In the early days, you want to be nimble, fast, and cheap with exploration, right? Money goes in the ground. That's what makes discoveries. And so by South32 having us run the exploration, we can keep on acting like a junior, even though we're funded like a major, right? And so that is the I think the big win for South32 right now. We go make a meaningful discovery. No, they're going to want to run it themselves, and they're not going to want us as a minority partner in that either. So I'm not going to be, be an asshole and start speculating when that timing is, but it is 100% drill dependent, right? We make a major discovery. We prove that Taylor type analog exists at Salina. Yeah, South32 doesn't want us there, and I don't want to be there either. Right. And so that's when the discussion starts.
Okay. So I just want to be clear for people listening in, for investors, and it's going, right, okay, where's the inflection point? Where's the kind of the win, the step change, et cetera?
Sure. That's a great way of pointing it out. And the beauty is we're still in that Lassonde curve, right? We may be funded by a major right now, but we're still in that pre-discovery spot. And so we make that, that big game-changing drill hole. That's when things, really start taking off for Ridgeline and its shareholders. And then there's always that dance with when you have a major partner, right? When is the right time for a transaction? I think every project is completely dependent on the project and the major that you're dealing with. The only thing I can say with certainty is I've never seen a major say, hey, you know what, we'd love to have a major, a minority partner in this project, right? They don't want to have a partner. They want to run it the way they think fits best for them. And so the major catalysts are essentially drill based, and they're in 2025. If we hit big, that is the step change for the company. And then comes the question of how do we monetize the asset, and that's a tricky question and one I can't answer just yet.
Right. Okay. And let's get into Black Ridge. Obviously, same partner, NGM, involved with that. I mean, how does it compare to Swift in terms of the setup and also the amount of work that's going on?
Well, so it's Black Ridge is an interesting project. It was actually the flagship asset that we did the seed round of the company on. So it's 4 kilometers downtrend of the Leeville mine, which is a 10 million ounce plus deposit of greater than 10 gram per ton. Well, actually, I think it's about 9 grams now, average head grade. So one of the highest grade underground mines in Nevada. Really underexplored fault zone that since we started the company in 2018, they've since made a significant discovery called Fallon, which is halfway between our deposit and the Leeville discovery, directly along the same fault zone. That's over 1.5 million ounces of 11 grams per ton, which actually does rank it as one of the highest grade deposits in the United States and North America, actually. So grade appears to be increasing towards our project. Everything's getting slightly deeper towards our project as well. So NGM is going to drill a maiden drill hole. The same team that made that Fallon discovery is going to be drilling a similar style drill hole across that fault zone, chasing the same host rocks in the on the same fault zone, same trend, with the hope of hey, do we hit the right host rocks? Do we hit some evidence of alteration, gold mineralization that gives them the confidence to keep drilling 1,200 meter drill holes, 1,300 meter drill holes? To chase these things. And so, like I said, we're also to our west, we're 2.5 kilometers away from the Gold Strike open pit, which is a 40 million ounce plus deposit that actually was the flagship for Barrick. So we're right in the heart of the Carlin Trend. Great location. We're on a mineralized fault zone. It just has to be drilled, and we needed to bring in a partner like NGM to drill those deep holes. I mean, they know more about our project than we do, frankly. Right? They have more data in the area. They have all the the drilling expertise and everything to make this thing successful. So they're the perfect partner to be exploring this with.
Right. Okay. And in terms of the deals, again, if you don't mind just saying it, because I know we've talked about it in the past. So just
Sorry, I'm all over the place. Yeah. So that is a 10 million US deal for 75% of the project. If they hit all their milestones, they get 75%. Ridgeline retains a 25% fully carried interest all the way to commercial production. So that would be the same style of deal as Swift, but Swift is a $30 million deal for 75, and Blackridge is 10 million for 75. And that's largely due to the size of the project. So Blackridge is only about 15 square kilometers. Swift is 75 square kilometers. So on a per square kilometer basis, you're actually seeing a higher dollar figure being spent at Blackridge than Swift, but it's just a smaller project.
Right. Okay. Understood. And with regards to the allocation and that spend, do you think that's going to be enough to actually find enough to be of interest to them, or would this be a bolt-on satellite type approach?
No, so that's the beauty of it is typically these deposits that form along these fault zones actually form like pearls on a string is kind of the analog everyone uses. And these pearls are typically anywhere from a few million ounces to 10 to 15 million ounces, right? We just don't know how big the pearl is yet. But either way, regardless, it would be a very meaningful discovery. Anything that's in the kind of, 1.5 million, 2 million ounces of high grade becomes very exciting to the NGM team. Like I said, they have all the infrastructure. They can access our project via underground. They would just develop from the existing deposit of Fallon. They would just continue developing underground all the way to Black Ridge. You wouldn't even have to, have a big shaft at surface or anything like that. It would all be accessed from existing infrastructure if a discovery of big enough scale was made. So yeah, it's a great scenario. It's we're right in the right jurisdiction and area of Nevada, and now it's just a matter of drilling it.
Right. Okay. And then obviously we talked at the beginning. You've also got your own stuff going on there. Big Blue. Let's just remind people what that is before I dive into it.
Yeah. So Big Blue is a historic past-producing copper mine. Reyna Silver has the adjacent ground to us, and I actually think that's a great analog to bring up because we believe we have the porphyry copper source at Big Blue. Reyna Silver owns the CRD. Kind of the rind of CRD on the edges of that porphyry. So you got Peter McGaw and their team, one of the best CRD exploration teams on the planet, chasing what they think is a CRD of scale on their ground. Well, to produce a CRD of scale, you have to have a porphyry source, and that's what we're testing right now at Big Blue. So we're drilling underneath the historic copper mine that produced up to 98,000 pounds of copper at 6% average grade back in the early 1900s. No real meaningful exploration has been done on this project in that time frame since. We did the geophysics to identify and target underneath the mine and hopefully chase high grade mineralization at depth. We'll see what this program brings. It's only a 3-hole maiden program, so it's a massive project. We're just dipping our toe in the water with these first few holes. But my definition of success with Big Blue would be getting some nice high-grade copper underneath that historic mine that is showing evidence of that porphyry system, which would then allow us to vector towards that hopeful porphyry source with future programs. So pretty impactful first program for the company. Hoping that we'll have assays out in late May. And then we're going to be moving over to our Atlas project, which is an oxide gold play near the Carlin Trend. Sorry, got a little bit of a cold. Directly after that, and we'll drill again another 1,000 meters. Mineralization is outcropping at surface. It's over 3 kilometer long gold trend in soils and rock chips with up to 8 grams per ton oxide gold at surface. So the analog to that one would be like the North Dark Star deposit, that discovery that Gold Standard Ventures made. That's now being put into production by Orla Mining. And the discovery hole there, which actually our VP Expiration, Mike Harp, was the geologist who planned that drill hole and logged it, hit 126 meters at 3.95 grams per ton oxide gold. So that was, that's like a snow line type intercept essentially, right? Difference is it's not up in the Yukon. It's in, directly adjacent to operating mines in Nevada. So that's what we're going for at Atlas. I think with all-time highs in gold, any kind of success, even close to that, would be a big thing for us. So excited to get that program going.
Okay, I just want to get a run through the projects, remind people, of the entire portfolio. Then the big takeaway from me is $11 million of drilling this year, which is just slightly shy of 50% of your market cap at the moment. So you're set for some big news this year, it sounds like. That's for sure. And can you just sort of explain to me? Recently, you raised $500,000 recently on top of the money which from the management fees that you're getting. What was that for? What was that?
Well, we were approached out of the blue by a high net worth individual who was not currently a shareholder of Ridgeline. Felt like he missed an opportunity with our previous raise, which was at 15 cents with a half warrant at 25. He came in and said, "Look, I'll do I want to build a position of scale in the company, and I don't want to do it in the open market. I'd like to do a $500,000, and I'm willing to do it at market price with no warrant." And so, when someone offers you that, you don't take long to think about it. You say yes and figure out where to spend the money, right? So I think it was really good with 2 drill programs being fully funded by us. I always like having a little extra dry powder in case we have success, and allows me to keep drilling and keep bringing more drill news to the market. So I think it was a good move for us.
Brilliant. Chad, appreciate the update. Sounds like it's going to be a spectacular rest of the year for you guys, and with gold and copper doing its thing. Not bad.
I like it. Yeah, it's definitely not bad.
See you again soon.
Thanks a lot.